how to use the Forex calendar to trade. We're starting the week with having a look at US real yields and gold. I've inverted it on the chart, so US real yields inverted and gold have a really tight correlation stretching over many decades. And recently we saw a bit of a divergence where gold tanked and real yields went the other way. So it's reasonable to expect that gold will catch up with the real yields again, specifically going into December and January, where over the last few years, 9 out of 10 times we had a massive gold rally. So I'm looking for entering longs in the lower ranges. From a yield perspective, I'm expecting yields to come down a little bit as well, so that should aid gold as well. Also having a look at the inflation forwards. The blue line is the 5-year over 5-year inflation expectation in the United States and Euro JPY, and a lot of other risk correlated assets like the Australian dollar, Canadian dollar. They tend to follow inflation expectation very closely. Now, oil rallied massively last week. So did copper, and that's all feeding a little bit into the inflation expectation narrative going into next year, where there's talk of a commodity boom. That's always been helping Euro JPY to peel off the lows as well. However, most of the year we struggled really going past any of these levels over here. So as long as we can hold up there, and in a short term we probably will, I find it very difficult for Euro JPY to make a massive leap just yet. So there's a little bit of caution going into next week. Having a look at the calendar, the first thing that we'll be looking at is the Chinese manufacturing numbers going right before into RBA cash meeting. Now RBA last month cut the rates and AUD started rallying because all the short positions that were building into the rate cut were unwinding. And that unwinding process hasn't completed yet on some pairs like GBPAUD. So these two central banks are a little bit at odds, where the RBA, they've cut the rates and they're happy where they are. And we likely see communication feed into that going into Tuesday, 1st of December, that they will be staying where they are. But the Bank of England is a twofold story. They're very likely to cut if the negotiations with Europe isn't going smooth. And our base case is there is a deal coming, but we will be trading based on that they will run down the clock deep into December. And based on that, I'm very interested to start shorting GBPAUD again towards 177 levels. A quick rundown how we arrived here. So in the start of August, it came kind of clear that RBA might be looking into cutting rates, but that didn't actually reflect yet. And then the bond market started pricing it in mid-September. I'm going to overlay Australian 2-year yields and invert it for a better understanding of the matter. So around mid-September, the pricing of the RBA cut got very aggressive. You can see GBPAUD rallied alongside when yields were dropping, all the way come to I believe it was the 2nd or 3rd of November, where they cut the rates and that unwinding process began. And that's when GBPAUD decoupled from the 2-year Australian yields and started recoupling with the 2-year UK yields or gilt yields. Now, gilt yields on the 2-year, the closer the yield to maturity is usually. So the 2-year, the 1-year, they're more responsive to interest rate decisions. And the understanding is that the 2-year yield on the Australian dollar is gonna stay where it is. It's not going to hugely move away. But with the pound or the UK yields, there is some downside room for maneuver, but the upside is pretty much capped at where it is. And based on that, we're expecting for GBPAUD to reprice just a little bit lower, and that unwinding process to take it all the way back there where the RBA rate cut story began, so around 177 level. Based on that, I'll be looking around these levels. So ideally we want that level to hold in the beginning of the week and we get a straight dive. That would be perfect. If we do get a rally back into that level, I'll be looking to short from here as well. So we use these calendars so we have a bit more guaranteed volatility. We know that around manufacturing there will be some sort of a price movement, and that will give us opportunity to jump into trades. Same thing with the RBA cash meeting. We're pretty much certain there will be some sort of a volatility. Most of the time it's very strong as well. And that's where you want to be. You want to be in a trade where prices rapidly move away from your entry, so you don't just sit around in these boarding and tight ranges, not knowing or not very sure if price is going to go your way. And the longer you're in the trade and the less it moves, the more fidgety you will become and the more uncertain you are. So we try to use the calendar, get the timing right with the trades to trade in the direction we're looking for, because then we get the oomph in the market. There's a couple of other interesting volatility moments in the market, specifically for the United States. And I have a look at USDCAD. United States data has been holding up not bad at all, and that tends to benefit the Canadian economy a lot, because most of I believe about 80% of Canadian exports go to the United States. So if the United States is doing well, Canadian economy is doing even better. And we tend to see that USDCAD comes lower every time we get good data prints from the United States. Starting from the week, I am looking to short if you get back into a rally into here. Either way, we are looking for good traction lower on the ISM manufacturing, the Thursday print for the ISM services, and then lastly for the NFP. So I've got three data points where I'm looking for USDCAD to make a sharp drop lower. If any of these data points disappoint, I think market will still see past that, because the growth was altogether not bad. And the thinking is that lockdowns are now a little bit lighter and we're mostly coming out of them as the vaccine comes through. So I think there's a lot of positive pricing left in USDCAD to make headway towards 128 and possibly lower. We have a last look at S&P 500 too. Now the narrative is that we will have a vaccine, and ES has been trading very bullish. So last week we had a look at a range that we're sitting around here. It was very binary. It wasn't really certain if you're going to push up or push down from here. Now the bullish narrative is as a standard always with ES. But from there on we could have maybe dropped a little bit lower and started reloading longs. But now we're at a point where we're right sitting on the resistance ceiling, and it can get a little bit tedious trying to buy straight into resistance. It's a bit unnatural. But based on the stories and the way that the narrative is developing, we are actually headed for 37. The only thing that can really start dropping this lower is incredibly bad data or very negative news on the political side. Apart from that, we're pretty much looking for these highs to break as well. So that's the wrap. Just a quick look at things again. Euro JPY looks a little bit toppish because of the way that inflation expectations are moving. They might change and move higher. Euro JPY will move higher with it as well. We're looking to sell GBPAUD on the basis that the central banks are at odds, where RBA is neutral and Bank of England is possibly has a repricing of a rate cut. Even if it might not come, the repricing could drop the currency pair. We're also looking to sell USDCAD because of better US data, feedback loop into the Canadian economy. That's all from me.